The determination of income. Obviously, if you are determining the income, the immaterial things should not be kept into the importance, should not given the importance, but material things should be given importance in determining the income. The question arises, what is a material fact? Hello guys, I hope each and every concept which we have studied in the previous classes is very much clear to you. Now, in today's class, in today's video, we will be studying about the materiality concept. Now, what is the meaning of material things? Materiality simply means which is, specific, which is basically useful. If something is useful, it should be recorded in the books of account. Obviously, you all want to know the information about each and everything which is material, which is basically useful to you. Okay, so if it is immaterial, if it is not useful, why will you need to go into the deep part? Obviously, you will not go into the deep part if it is, if it is not useful for you. For example, let's take an example. If your exams, since you are in grade 11th, okay, now the exams will be starting, for example, from 5th of August. From 5th August, your examinations will start. So this is useful for your information. Okay, now if there is an information that the examination of 10th will start from 6th or 8th of August, so this thing is not material, this is not useful for your information. You should not know this thing because you are in 11th now. Okay, are you getting my point? So all the material things, all the things which are material, which are useful, should be there in the accounting information. Now let's go to the concept. So accounting basically focuses on the material facts, all the facts which is material, which is relevant, which should be known to the ultimate users. Its knowledge must be given to the ultimate users. Those only facts should be disclosed into the accounting information. Now, efforts should not be wasted for the immaterial facts. If it is immaterial, then it should not be given as such the information, or it should not be given the importance to let the users know. If it is immaterial, if it is material, obviously you will have to record it. So the examinations which are going to start from 5th of August is the major concern for you as a student, not the examination of 10th. Is that okay? So this is the basic reason, this is a basic scenario behind the concept of materiality. Next, now efforts. Now basically the determination of income. Obviously, if you are determining the income, the immaterial things should not be kept into the importance, should not given the importance, but material things should be given importance in determining the income. The question arises, what is a material fact? What are all the possible items which are known as material? Now we will check it out. So what is the meaning of material? As far as since you are students, I just gave you an example, but in accounting, what can be the examples? We'll see this. Now, it totally depends upon its nature and the amount involved. If the amount involved is very much low, is very small, very less amount, then it is obviously not material. Then a person should not waste time to give the information about the item or the fact which is not material, where the amount involved is very much less. It should avoid wasting time on it. So it totally depends upon the nature and the amount which is involved in that fact. Next, the fact considered as material, if it is only the material which is basically its knowledge would influence decision of informed users. If at all, for example, just as the information I gave you as the material fact, I told you that the examination of 11th, your examinations will commence from 5th of August. Then only you will be able to take the decision that whether to start studying right away, or whether you have time, or if you were planning to go outside the station, whether you should go or not. These are all the possible reasons, possible activities which are simply related to your examinations. Because if at all you go for vacations, you will not be able to give the examination. So with this, you will change your plan. That's what is with the accounts as well. So these information helps the users to take the financial decision whether to invest in the company or not to invest in the company. If at all, for example, now what is material and what is non-material? suppose a fire broke out in the factory, okay, and a company incurred a loss of say rupees 1 lakh, and another fire broke out where the company lost goods worth of rupees 1000. Now you only tell me which one is material. Obviously 1 lakh is material. Why? Because the amount involved is huge. This might be, this might alter the decision of the informed users. The users might, not invest, or might invest low, or might invest more, depending upon the situation the company is telling to the users. Is that okay? So these are the material facts where the amount is much more higher as compared to this one. So it totally depends upon the nature and the amount. So as I just given you the example for 1 lakh, so it is much of the relevance. So it is a material thing, and fire thing is also a material thing, but the amount was low. This won't be recorded, but this would be recorded as the material facts. Okay. Now, next is basically the amount. And now, for example, there is a theater. In a theater, the capacity, suppose the theater has a capacity of 200 people, where at a time 200 people can sit and can watch the movie. Now just imagine if I were to invest 10 lakhs more, and with the expenditure of 10 lakhs, I can increase the capacity with 50 people. That is, I can increase the capacity to 250 people to see the movie at a single time. This is a material fact, because with this my earning capacity will increase. In every show, in every movie show, I will be earning more because 50 people will be sitting more at the same time. Is that clear? So that is a material fact. That is simply said, the money spent on the additional capacity, in making the capacity more in the theater is a material fact, because it will increase the future earning capacity. Next example is change in the method of depreciation. Now, why is this material? Because machinery, suppose I purchased a machinery for rupees 10 lakhs. If I have purchased a machinery for rupees 10 lakhs, with the day-to-day usage, with the passage of time, the value of that machinery gets to deteriorate. Okay. Now, if I am saying that I am following 10% per annum, that I will reduce the price of the machinery by 10% per year, so there can be two possibilities. That is, first and the second. In the first year, the depreciation, that is the amount which I will reduce, will be 10% of 10 lakhs, that is 1 lakh. The remaining amount left with me will be 9 lakhs. The second scenario also is the same, that is 10 lakhs minus 1 lakh, and the remaining amount will be left with me 9 lakhs. Now, after the second year, again I will reduce how much? 1 lakh, that is 10% of the original price. This is the original price. This is the 10 lakhs at which the machinery was purchased, and I am charging depreciation on this 10 lakhs only. So it will reduce by 1 lakh, and the end of the year I will remain with the machinery value of 8 lakhs. So this is one type of method. The other method is where I have reduced it to 9 lakhs, and now I will charge depreciation on the reduced value, that is 10% of 9 lakhs will give me 90,000, and the amount which will be remaining with me will be 8 lakh 10,000. If I am following this approach regularly, consistently, there is no problem. If I am following this approach again consistently, there is no problem. But if I switch from this to this in next year, and from this to that in another year, this is a material fact, because you just saw the expenses for that year was 1 lakh and 1 lakh, which were equal. There was no problem in the first year, but in the second year, the expenses booked by the first company was 1 lakh, and the expenses booked by the second company was only 90,000. So this company will have a much more profit as compared to that company, because it has shown expense of 1 lakh and the second company has shown expense of only 90,000. So this is a difference in the profits. So that's why, if at all there is a change in the method of depreciation, this is also a material fact, because it is affecting the profit earning capacity of that particular enterprise. Okay, next, a liability which can arise in near future is also a significant information, because everyone is of the view that in future no liability is to be incurred, no amount has to be paid. But uncertainties are always possible. If if a person gets to know immediately that there is a possibility of a liability which has to be paid in future, this is a significant effect, this is a significant information which is a material which should be known to the users, so that they can be prepared that yes, the amount will be spent, the amount will be paid, which will reduce the profitability of that company. So these are all the material items, material facts which has to be disclosed. Next, so material facts have to be disclosed through the financial statements. Obviously, the accounting information is prepared. The financial statements are prepared with the accompanying notes. Each and every description, each and every explanation as to why is this method changed? Why is there a possibility of liability? Why is the theater being constructed for more capacity? Everything should be accompanied with the notes as well. Is that clear? Next, so that the users can take the informed decisions. This was simply the materiality concept. Apart from that, if the amount involved is very small, as I just told you, there was a fire broke out of 1 lakh in one company, 1,000 in another company. If the amount is very much less, that is only 1,000, then strict adherence to the accounting principles is not required. You should not follow the strict accounting principles then, because the amount involved is very much low. That is not material, in fact. So that's why there is a relaxation for this possible item. Next, for example, the stock of erasers, pencils, scales, etc. These are the examples which have a very much low impact. Why? Because the price of the erasers is rupees 2 or 5. The price of the pencils and scales is also rupees 4 or 5 or 10. So the amount you have spent on purchasing that stationery is not of the material fact. The stationery items are not to be shown as assets, even though whether they have consumed or not, but you will not show it as an asset. It will always be treated as an expense, a normal expenditure, a normal revenue expenditure, which will be deducted from the incomes in order to ascertain the profit. Okay, this was the small example of the non-material, that is immaterial thing, and 1,000 fire broke out was the another example. So this has to be treated as revenue expenditure while calculation of profit or loss in your profit and loss account. So this was a material concept explanation, which simply says all the material things has to be recorded, immaterial things not to be recorded, not to be wasted time on. Okay, I hope this full concept is very much clear to you. Thank you so much.